The math no longer adds up. I'm George Sterling, and I've spent 2 decades watching how the elite protect their capital while the world burns. Look around you. It is early 2026, and the American dream is being fundamentally restructured right under your nose. While the headlines distract you with political theater, a quiet, brutal divide is forming. The middle class is being systematically siphoned into two groups: the small minority who own the future and the vast majority who are unknowingly financing it. Most people tell you they're struggling because of the economy. But the brutal reality is that 99% of people are too afraid to face the truth. You aren't broke because you don't make enough money. You are broke because you are being hunted by a multi-billion-dollar machine designed to keep your bank account at zero until the day you die. Every day, you make micro-decisions that act as a death by 1,000 cuts to your legacy. You've been programmed to believe cash is a safe harbor, but in the 2026 landscape, sitting on dollars is like holding a block of ice in a desert. It is melting every second. We are stripping away the illusions. This isn't just about inflation. It is about systemic erosion. If you cannot move your capital from devaluing currency into productive assets, you have already lost the economic war of this decade. This is a masterclass in wealth defense. Welcome to the wake-up call. Why is it that the more money you save, the poorer you feel? There is a silent predator in the 2026 economy that the mainstream media refuses to name. We are witnessing the systematic debasement of the dollar. If you put $10,000 in a savings account 3 years ago, the purchasing power of those dollars has eroded by nearly 20%. The hidden force at play is the debt-to-GDP ratio. The government cannot pay back its debts with valuable money, so they must pay them back with cheaper, printed money. While the top 1% are siphoning their capital into hard assets, they are encouraging you to stay in cash. They want your labor to be taxed through inflation without you ever seeing a tax bill. Think about the math. If the supply of money increases by double digits every year, but your savings account only pays you 4%, you aren't earning interest. You are losing purchasing power at a rate of 6% per year. This is the invisible tax on ambition. It is designed to keep you running on a treadmill that is moving faster than you can sprint. To break free, you have to stop thinking like a saver and start thinking like an owner. The playbook you were handed at birth is dead. In the 20th century, a stable job and a 401k was a roadmap to success. In 2026, it is a purely packaged trap. We have been conditioned to be consumers before we are producers. We trade our most valuable resource, time, for a currency that is losing value by the second. Since the early 2020s, the cost of looking successful has skyrocketed by over 300%. We are trapped in a cycle of debt-funded vanity. If you sign for a home with a 7% interest rate just to live in a prestigious zip code, you aren't an owner. You are a glorified tenant of the banking system. When you use buy now, pay later schemes, you are literally wearing your shackles in public. The flaw isn't in your income level. It's in your financial identity. You've been programmed to believe your worth is tied to the items you possess. But in the 2026 owner economy, your worth is tied exclusively to what you control. The elites aren't smarter than you. They just stopped playing the status game decades ago. They transitioned from being the prey to being the architects. Let's talk about the fear of missing out. In the United States, FOMO is a multi-billion-dollar psychological weapon optimized by advanced AI. You see a neighbor with a new SUV or a friend on a luxury getaway, and your brain triggers a status threat. Your ancient instinct fears falling behind the tribe. This is exactly when the trap springs. Corporations use that survival instinct to make you buy things you don't even like, with money you don't even have, to impress people you don't even know. You aren't buying that $1,500 phone for the camera. You are buying the social permission to belong to this successful class. But true status in 2026 is the quiet power to walk away from any situation you hate. It is having years of living expenses sitting in income-producing assets while everyone else is one missed paycheck away from collapse. Are you brave enough to look broke while you are actually becoming wealthy? That is the final psychological barrier. If you can survive the judgment of people who are secretly drowning in debt, you have already won the game. Now, we stop talking about the problem. I'm shifting your identity from a high-end consumer to a calculated allocator. At Prosperity Prism, we believe in the one-to-one wealth ratio. For every single dollar that leaves your pocket for a want, $1 must simultaneously go into an income-producing asset. If you cannot afford to buy two of them, you cannot afford to buy one. We are moving away from dead capital and into high-velocity assets. We are looking at AI-automated cash flow businesses, decentralized credit, and recession-proof real estate. You must look at your bank statement like a general looks at a battlefield. Every single dollar in your account is a soldier. Are your soldiers fighting to capture more territory and bring back more soldiers? Or are they being slaughtered in a shopping mall? The wealthiest people right now aren't saving. They are rerouting. They've identified the leaks in their economy and plugged them with iron. In an era of high inflation, cash flow is king. It's time for the blueprint. To build a fortress in 2026, you must stop the bleeding. First, eliminate subscription serfdom. The average U.S. professional pays over $900 a month in invisible subscriptions. On their own, they seem harmless. Combined, they are recurring leverage against your freedom. If you haven't used it in 30 days, kill it. Second, exit the new car trap. A new vehicle is a depreciating computer on wheels. The moment you drive it off the lot, you lose 20% of your equity. The top 1% by assets that appreciate, the 99% by liabilities that require debt. Sell the ego. Buy the utility. Third, the convenience tax. You are paying a 50% premium on survival needs through delivery apps just to save 20 minutes. This is financial suicide. You are trading your future wealth for the luxury of not leaving your couch. Reclaim these thousands of dollars and send them to the front lines. The top 1% understand the velocity of capital. In the architect's playbook, you must master two strategies. First, arbitrage your debt. The elite use corporate debt to buy things that create value. If you have low-interest capital, do not rush to pay it off with devaluing dollars. Instead, use that capital to acquire high-yield assets that return 12 to 15%. This is positive carry, the engine of modern wealth. Second, the tax-efficient shell. You don't get rich by what you earn, you get rich by what you keep. In 2026, the tax code is written for business owners. If you don't own a legal entity to hold your investments, you are voluntarily giving away 30% of your life's work. By structuring your portfolio as a business, you unlock the ability to deduct your life's expenses as business necessities. You move from being a taxpayer to a tax strategist. Look at the math. Math has no ego. The consumer earns $120,000, but net savings are zero because of luxury leases and premium lifestyle choices. They look successful, but they are one crisis away from ruin. Now, look at the architect. They earn the same salary, but drive a reliable 5-year-old car and cut the financial trash. They save $2,500 every single month. In just 10 years, at a 10% return, the architect is sitting on over $500,000, while the consumer is still working 60 hours a week to pay for a car worth nothing. The architect has reached escape velocity. Their money now earns more than their labor. The architect didn't work harder. They simply understood the compound interest of sacrifice. The wealthy think about the next decade, while the poor think about the next weekend. We are entering the most dangerous phase of the 2026 economic cycle. Avoid the 3 wealth killers hunting retail investors. 1. Chasing the AI mirage. Every influencer is screaming about the next game-changing token. But in 2026, the market is flooded with pump-and-dump schemes. The smart money buys the boring infrastructure, the power grids and data centers, while the crowd buys the hype. 2. The liquidity trap. You must have 6 to 12 months of expenses in a war chest. In 2026, cash isn't trash, it is your shield. If you are 100% invested and a dip hits, you become a forced seller. 3. AI-driven fraud. Scammers are impersonating bank officials with deep fakes. If an offer feels too good to be true, or if there is an artificial sense of urgency, hang up. Protecting your downside is as vital as growing your upside. This journey is about legacy. It is about being the one person in your family who had the courage to say, and no more. No more living for the weekend. No more being a debt slave to a system that views you as a data point. When you stop buying financial trash, you are reclaiming your autonomy. You are buying back the Tuesday afternoons you'll spend with your children 10 years from now. You are buying peace of mind. The 99% are living a scripted life of regret. You have chosen the prism perspective. You see the world as a battlefield of capital. This is your moment to pivot. The 2026 wealth transfer is happening now. You can be a spectator, or you can be an architect. I'm George Sterling. Subscribe to Prosperity Prism and leave a comment with the word architect if you are ready to build. The journey to the top is long, but the view is worth every sacrifice. I'll see you in the next one.